Hi, my name's Christian Waldegrave, Market Analyst at Teekay, and this is our conventional tanker market update for June 2012. Now, in our last market update, we talked about how the large crude tanker sectors, the VLCC and the Suezmax, were outperforming the Aframax and the product tanker sectors in recent months. And that was due to very high levels of global oil production, particularly OPEC oil production, and a lot of inventory building that had been going on, in part to mitigate against any potential supply disruption from Iran due to the sanctions which are being put against it by the US and the EU. And we said in our last update that these effects might start to ease going into June and July and into the third quarter. And that's exactly what has happened. We've seen during June that VLCC spot rates came down from $36,000 per day in May to around $21,000 per day. And Suezmax spot rates came down from around $28,000 per day to around $20,000 per day in June. And as we said, that's because that cycle of inventory building, which has been going on through the first half of the year, is now starting to slow down. And that means less cargoes coming out of the Middle East and less demand for West African barrels on Suezmaxes as well. However, in contrast, the Aframax market actually showed quite a lot of volatility during June, especially in the Mediterranean, where we saw spot rates get as high as $30,000 per day. And that's due to a large number of cargoes, especially coming out of Libya, a very high number of cargoes coming out there. And we're not exactly sure why that is or why there was such a rush of activity in the Med. But certainly it shows that there is some volatility in the Aframax sector now. And we think that there could be some more volatility going on during the summer months. And also another factor to watch in the Aframax market is in the Caribbean. We talked in our last update about we're at the start of the Atlantic hurricane season now, and we've actually seen 4 tropical storms which formed before July the 1st, and that's the first time that 4 storms have formed before July 1st since records began in 1851. And in fact, that 4th storm, Tropical Storm Debbie, it did close down some US Gulf oil production during June for a brief period of time. And although it didn't really affect tanker rates during June, it goes to show that it's a factor which might give some volatility to rates during the summer months. So I think we're seeing that kind of reversal now where the large crude tanker sectors are starting to come down, but we're seeing some interesting things going on in the Aframax sector. And then the final thing I wanted to point out during June was the LR2 market, which is the coated Aframaxes. And the LR2 market has been quite poor during the first half of the year, and rates have averaged less than $10,000 a day for most of the year. But in June we saw those rates starting to recover, and LR2 rates from the Middle East to Japan are now up to $13,000 a day, which is an 8-month high. And that's on the back of more naphtha cargoes moving from the Middle East to Japan. So that's a positive sign as well, and we think that LR2s will start to average higher through the second half of the year due to improved demand for naphtha. So that wraps up our update for June 2012, and we'll talk to you again next month.